Hey, good morning. This is Mayor Valensky with Driving Markets, driving while talking about markets. Some viewers have mentioned, am I growing a beard? No, I'm not growing a beard. I've just been a bit lazy and not shaving, but next week I'll trim it so I'll get back to the normal self. But now it's just it's a bit itchy at the moment. Okay, so anything said in this piece is an opinion only. It's not investment advice, not financial advice, and based on driving markets since January. If you've gone according to what I've said, then you would have lost a load of money, because I've been talking about the markets going down and they've done exactly the opposite. So one of the viewers yesterday in the client said clearly that not only has she got it wrong and losing a fortune, that I said that also I myself am losing a fortune. She says, well, if a pro loses a fortune, then what can we do? I said, well, you know what? You can be a pro, you can be in the market for 20 years, 30 years, and you never get it right all the time. If you get it right some of the time, you're doing very, very well. So we've got to be absolutely honest. It doesn't matter really at what level knowledge that you have. All it means is that the market does what it wants to do, and you could pick the wrong direction based on all of the facts. You should be getting it right. However, you get it wrong. So just be absolutely clear. Just because I'm doing a driving markets to empower you with knowledge and background and technicals, it doesn't mean automatically I'm going to get it right. It doesn't mean automatically you should definitely follow what I say, because it's an opinion only, and I don't want you losing money. The idea is for you to make money, but we've got to be solid on the fact that this last month I got it wrong on a lot of things. For example, I've been telling you in January that the markets will probably rally, but they should be going down. They haven't gone down, okay? They're only going up at the moment. That doesn't mean they're only going to go up. It means that's where the trend is at presently. The trend at the moment is the markets want to go up. They discard any bad news. It's a narrow-based rally. It's not a huge-based rally. It's based mainly on the mega firms, the huge, gigantic firms that have had percentage increases that have pushed up the indices. Okay, so overall, when I'm talking about driving markets, it's giving you a general background, a bit of knowledge. Let's say, for example, Facebook or Meta. That's the one that I've been following. I've been very negative on Facebook, very negative on Meta. They dropped significantly last year, but they came out with good, solid results on Wednesday, and the shares went up yesterday 27%. Now, to me, if I was just to look at that on its own, I'd say that is just ridiculous. I mean, why would a company, a value, go up by 27%? That, to me, is a classic overbought situation. That is a classic situation. Ostrich sticks his head in the sand. I don't care what the situation is. They've come out with great results, therefore I'm going to buy them. Now, I'm particularly negative on Meta on Facebook, so you're going to get a side of me that is negative. I'm not short of the stock. I don't trade the stock. Okay, so it's a purely objective and a neutral view, where I believe that Facebook is a badly run business, and I don't think their metaverse is going to do well. So they had great results from advertising revenue in the last quarter. That's where the revenue comes from. Advertising revenue. They had great results from advertising revenue last quarter. However, the bar that was set for their results by analysts was so low that you could beat it, and therefore to get a 27% increase in the stock and have a fantastic forward-looking statement from Mark Zuckerberg, all of that put the investors and the traders onto a buying spree, and they went and bought Meta. Facebook went up by 27%. To me, any stock that goes up 27% in one day is an opportunity that you should be selling into it or going short. But Wall Street's much more powerful than driving markets and Mayor Valensky, and they can do what they want. And maybe it'll go up another 27% now, and maybe it'll go all the way back to its highs where it was. All of this indicates a false market. Now, why is that? And I've picked on Meta and Facebook particularly to enhance you with a bit of extra knowledge. Inflation has gone down slightly, indicating by the central banks that they've got it under control. Interest rates have gone up, but indicated by central banks like in the UK and in the US that they're likely to either peaked now, or that might be a little bit more increase, or the pace has been reduced. So you've got there fundamental financial economics that are indicating that we haven't moved out of the circle of interest rates or of inflation. Yet the market's reading ahead and hoping and believing and dreaming and fantasizing that that's it, it's over, and therefore by 2023 or 2024 everything's going to be under control, and we're going to be back to a low interest rate environment and low inflation environment. They're wrong. We are going to be continuously for the next 2 years in a high inflation and high interest rate environment. They've got it wrong. Yes, in my opinion, they have it completely wrong. And you could say, well, who am I? Right, who am I? Who am I to argue against these analysts that make $3-4 million a year in salaries and bonuses, and they study and they know and their profits, etc. But I'm telling you, they've got it wrong. Okay? That doesn't mean that the whole market's going to collapse today or next week. It just means they've got it wrong, and the pushing in the prices higher is simply sucking people in to an investment that eventually is going to fall. And Meta and Facebook is an example of that. Amazon went up 8%, for example, on the back of whatever, who knows, just because all the tech sector went up. So the tech sector pulled up the Nasdaq to a level intraday at over nearly 500 points up. It came off slightly at the end, but it looks like the trend is up on the Nasdaq. It looks like the trend is up on the Dow and the S&P, and it's going to rise. Just talking about interest rates. The ECB raised interest rates by 50 basis points yesterday, and Christine Lagarde, head of the ECB, the European Central Bank, said there'd be another 50 basis point rise in March. It's already priced in. So the euro is building up strength based on that. It's already counted in. It's already priced in that rate rise in March. Okay. The Bank of England, Andrew Bailey, who I don't particularly have a big fan of, has said that, and the MPC said they've raised interest rates by 50 basis points yesterday in the UK, and that's more or less peaked. So the pound dropped because there's nothing to look forward to. There's no further interest rate rises, so the pound dropped. That there's nothing to push the pound higher in the near term. That's why the pound dropped yesterday in the UK. Bitcoin's interesting. Bitcoin, I did say already in the end of December, beginning of January, it's probably going to go up and go towards 25,000 level. Well, it's getting there, okay? It's going to rise with all the other high-risk assets. Yesterday, everything was up. There was euphoria across the market. Anything to do with high-risk assets or any assets was just pulled up dramatically yesterday. The dollar was down because equity markets were up so much. Bonds were down. Interest rates, mortgage rates in the States dropped below 30-year, dropped below 5% for the first time in many, over a year, I would suggest. So everything's looking rosy, everything's looking euphoric. The problem is that there's now no pricing in the market of anything that could go wrong. Everything is priced in that everything is blue, everything is green, everything is going to go up. There's no pricing and no caution in the market of anything going wrong. And that is the time to start looking at the risk assets, saying, right, there's nothing priced in for anything going down. Put options are particularly cheap. Now's the time to probably look at those put options, and now's the time to look at those shorts and say, okay, where can we go from here? Because it's not priced in. If it's not priced in, then you're going to get it at a discount, and that's really what you should be looking at when trading. That's more or less it for driving markets today. I'll give you a bit of background. You can subscribe. I've also got a TikTok channel and Instagram if you want to follow me on there. I'd be more than happy to give you updates and tell you what's going on. Furthermore, you can comment, share, subscribe, and speak to you soon. Have a good day, have a good weekend, good Shabbos, all the best.